Okay, Assalamu alaikum and good day, audience. This is Mustafa Mirchawala from Mirchawala of Accountancy, your F6 trainer. The objective of today's session is not just solving a past paper, but I always say that these revision days are for motivation because the last month is already very hectic. Normally, this is the research that normally majority students studies in last 40-45 days. Even they took the course 3 months back, but they real work hard in last 40 days. So these are hard working days, and many people think negative things a lot. Okay, so first of all, just for your motivation, that whatever course you guys are studying, the same course these people also study, the same course these people also attended. Recent results, I'm not sharing the result of 3 years back or 4 years back. This is the latest attempt, right? Okay, so when they can do it, you guys can also do it. They also followed all these instructions, like they also did the normal course, then they did the revision days, they read the articles. I hope you guys read the articles for CGT and value added tax as recommended in the class, right? They read the examiner report, they did the mock exam, all those steps. They made the summaries. I always recommend in my class to make short summaries, because F6 TX is a paper with very small things, very small things to remember. Okay, so it's better you write, or it's better you discuss with your friends. But the last thing which I said, discuss with your friends or you guys exchange your thoughts. But in the last thing, there are some friends who demotivates you. There are some WhatsApp groups. In those WhatsApp group, the interaction with the students demotivates you. So be careful with that. Be careful with that, because all the hard work you have done will get vanished if you meet negative people, right? Because one thing is natural, lot of things to learn. This is the fact that in this course there are many small things to learn. So this is natural. You will forget things. You will feel like I know nothing. But it's natural. It's with all of these students as well. Okay, right? So today we are going to discuss the latest past paper, as I have covered all previous past papers. All previous past papers are also on my YouTube channel as well, and it's in my LMS as well. Okay, so the one past paper which recently came, I think this past paper is September-December 2022. September-December 2022 attempt, because ACCA website releases combined past papers. Like for March-June attempt, they release one past paper, and September-December attempt, they release one past paper, right? Okay, and they released last 40 marks of the past paper. For your kind information, I have also said this in previous webinars. That for skills module, you guys are in applied skills module. For applied skills module, ACCA team says that the reason of failure or reason of not scoring high marks is last 40 marks. Normally people do mistakes in last 40 marks. Okay, they don't practice last 40 marks properly. So that's why we are doing last 40 marks past paper right now. And ACCA team also discloses on the website the last 40 marks. Okay, right? So let's start. As you all know, normally in your last 40 marks, there are 3 questions. One is 10-mark question and other 2 is 15 marks each. One is 10 mark and other 2 is 15 marks each, right? So the 10-mark question normally comes with tax planning part. Okay, so it's a tax planning question, but this time I feel like it's not difficult. Even I will take feedback from you as well. Let me show you the question. The question is in front of you. If you guys want to take the picture of question, you can. Just for the live class, I'm saying you want to take picture, you can. Otherwise, I'll share these slides with you. After the class, I'll share these slides with you. Okay, right? Now, obviously, as we are in the tax planning area right now, so you guys must know the basic tax rules. Basic tax rules you guys must know. Okay, right? So let me enlarge it. you should assume that today's date is 28 March 2021. I would request you to stay relaxed. You are not, first give this message to your mind that you are not going to study a very difficult thing. It's very simple. And you have already studied the normal course. You have, I'm sure that you have completed the course, because 15th, by 15th of Feb or 12th of Feb, you should have completed the course. Okay, so you should assume that today's date is 28 March 2021. Alicia is employed by Tusk Limited and is currently paid right now. This is the salary. This is the salary. Now use your common sense. Use your common sense. Even they have told you 60,000, she is there for a higher rate taxpayer because this is greater than 37,700. This 60,000 is greater than 37,700. So what does it mean? She is higher rate taxpayer. And what is higher rate taxpayer? Listen, one more meaning of higher rate taxpayer. If we throw more income in her account, that income will be taxed at 40%. I repeat, if we throw more additional income, more marginal income in her account, that income will be taxed at 40%. And I hope you remember the course. Normally, we don't need, in tax planning area, we are not required to calculate tax from zero. Sometimes you have to calculate additional tax. Sometimes you have to calculate additional tax, means tax on the new transaction, which is discussed in the question. Okay, so she is a higher rate taxpayer, means now additional income will be taxed at 40%. Alicia does not have any other income. Okay. Tusk Limited has offered Alicia the choice of either being provided with a company motor car or alternatively receiving a salary increase, also being paid a mileage allowance for using her private motor car for business journeys. Now, company has given two alternative to this employee Alicia. The first thing, company is saying take car from us. So that means company is employer, and this Alicia, this girl, is employee. So employee receiving car from employer, so it's a benefit. And we call it car benefit. So you need to calculate, if she receives this car, she has to calculate car benefit. And I hope you remember the employment income rules. The formula for car benefit is cost of car multiplied by relevant percentage. Cost of car multiplied by a relevant percentage, and that percentage depends on CO2 emission rate of that car. Okay, one thing I forgot to tell you, we have made a WhatsApp group for you, and the link of that WhatsApp group inside my chat box. Inside the chat box, you guys can join. Okay, sorry to interrupt. Now, so if she accepts car, she has to calculate car benefit. This is the additional working only. Okay, but if she does not accept car, the second alternative is employer will give some additional cash salary. Yes, salary is also taxable. Salary is full-time taxable. Salary is considered as employment income. Yes. And plus the employer will give some mileage allowance. What is mileage allowance? If employee will use his private car for the business of employer. If employee will use his private car for the business of employer, then the employer will give some payment for some driving. Okay, so this payment is full-time taxable, but tax department gives certain mileage allowance, the fixed certain mileage allowance, and the rates of mileage allowance are 0 to 10,000 45 pence, 0 to 10,000 miles it's 45 pence, and 10,000 miles and above it's 25 pence. Remember, you know the rules. Okay, so we have two alternatives. Let's start with the first alternative first. It's very easy. Company motor car alternative. The motor car will be petrol powered. Hope you remember the rules for petrol. Remember, If your CO2 is exactly 55 grams, then it's 15%. It's 15%. Remember? And for additional 5 grams over 55 grams, 1% will be added. 1% will be added. Hope you remember the rules. The list price is 22,400. Yes, it is relevant. It will have a CO2 emission rate exact. That's easy. Exactly 55. Exactly 55. Now you guys tell me. With exactly, be active. Be active. Now you have to win. With exactly 55 grams. With exactly 55 grams and petrol car, the percentage will be 15%. So this won't take much time. The car benefit will come in seconds. Like list price is 22,400 multiplied by 15%. List price is 22,400 multiplied by 15%. Now the good news. Tusk Limited means employer will not provide ACCA with any fuel for private journeys. Any fuel for private journeys. So there are no fuel benefit at all. No fuel benefit, only car benefit. Only car benefit, only car benefit, only car benefit. Okay. Under this alternative, ACCA will not run a private motor car. Means ACCA now won't use her own motor car because the company has given the car. So ACCA will use company's car only. Right? So in that case, you just have to calculate car benefit. You just have to calculate car benefit. All of you, please don't sleep. And yes, car benefit is a taxable benefit, not exempt. It's a taxable benefit. Yes. And when it's a taxable benefit, this car benefit will increase. This car benefit will increase your employment income. And when this car benefit will increase your employment income, so that means your employment income will go up. And when your employment income will go up, you have to pay tax on it. And as we all know that this lady is higher rate taxpayer. So we have to pay 40% additional tax on this car benefit. We need to pay 40% additional tax on this car benefit. That's it. That's it. Requirement done. Requirement done. Now, one request, don't sleep. Don't sleep and look at me very carefully. Now read the first requirement. Read the first requirement. Advice, ACCA of income tax and NIC. Implications for only ACCA, right? Not employer. Only ACCA. ACCA is employee. ACCA is employee. For income tax and national insurance contribution implication for the tax year 21-22, if she is provided with a company motor car. Now wait. Listen. First of all, she is a higher rate taxpayer. So the car benefit is a taxable benefit. Car benefit will increase her employment income. And when her employment income will go up, she has to pay tax. And how much tax she has to pay? 40%. That you have to calculate. Number one, no fuel benefit in this question. And the third thing, tell me, did she receive a cash salary? Did she receive a cash salary or a non-cash thing? Right now, she received non-cash benefit. Right now, in this requirement, she received the non-cash benefit. And on non-cash benefit, there is no class 1 employee NIC. There is no class 1 employee NIC is only on cash things. And you know, employee bear the burden of class 1 employee NIC only. Employee bears the burden of class 1 employee NIC only. And we all know for non-cash taxable benefits, there is one class 1A NIC. And 1A NIC is not borne by employee, it's borne by employer. It's borne by employer. The burden of class 1A NIC is borne by employer, right? So right now what they are saying, advise ACCA. So we have to just advise employee. We just have to advise employee, not employer. So there is no NIC implications here. There is no NIC implication here for employee, because employee just bear the burden of class 1 employee NIC, and class 1 employee NIC is calculated on cash salary, cash bonus, and cash things only. Cash salary, cash bonus, and cash things only. Okay. I hope you got my point. So now how to write it? Very simple, very simple. What is, just let me see, the list price is 22,400. For your easiness, I have written all the theory before so that you save the time. The objective is to only understand the question. Understanding is the everything. So Alicia will be taxed for car benefit. Yes. Whenever employer gives car to employee, there is a car benefit. And that will be, you tell me what is the car benefit? 22,400 multiply by how many percentage? Multiply by how much percent? 15%. Somebody told me 3360. Okay, right? So this is your car benefit. This is your car benefit. Now, this car benefit will be added in your employment income. This will increase your employment income. And when your employment income increases, you have to pay tax. When your employment income increases, you have to pay tax. And how much tax you have to pay? 40%. This is your income, my dear student. This is your additional income. This is going to be your additional income. And on this additional income, as she is a higher rate taxpayer, she needs to pay additional income tax on car benefit in 21-22. One 344. Thank you. Thanks. Okay. Now, last thing. No additional NIC implication on ACCA for car benefit as it is a non-cash benefit. As it is a non-cash benefit, so employee never pay NIC, never bears the burden of NIC on non-cash benefits. We all know this. We all know this. Okay. So these 3 marks, I would clearly say these are free. This is free marks. Because you guys have done the exam kit. In exam kit, there are more difficult questions than this. In exam kit, more difficult question than this. Now, listen to me. I hope you remember the rules. I'm going for second alternative. This is the second alternative. Alicia will receive an annual gross salary increase of 10,000. Yes, first thing. So now if she opts this alternative, her salary will go up by 10,000, and salary is pure employment income. Salary is pure employment income. So that means her employment income will go up by 10,000. So yes, she has to pay tax on this 10,000. She has to pay 40% tax on this 10,000. Now, Tusk Limited will pay. Tusk Limited means employer will see this employer and this is employee. This is employer and this is employee. So employer is going to pay. Tusk Limited will also pay Alicia a mileage allowance. Mileage allowance means payments for driving. That means employee will receive this amount. When she uses her private motor car for business journeys. Now, just for your sake, let me recall you this topic. Listen. Employee has a car. Employee has her own car at home. Okay. Now, employer said, I will only hire you if you bring your car for my business. So now, employee is driving her own car for the business of employer. So obviously this car will depreciate. There will be some wear and tear. There will be some oil change. There are lot of costs are there. So tax department says we don't allow the actual cost. We don't allow the actual fuel, actual oil, actual cost we don't allow. But instead of actual cost, they give you fixed mileage allowance. Tax department allows you fixed mileage allowance, which is 0 to 10,000, 45 pence, and 10,000 and above, 25 pence. So mileage allowance are the fixed rate allowed by tax department if employee drives his personal car for the business of employer. Okay. So one thing is mileage allowance. Second thing is amount received. Employee sometimes receive amount from the employer. See, this time she's receiving. See this thing, read this word. So employees sometimes receive amount from employer So that amount is full-time taxable. So I hope you remember when I taught you, when I teach in class, I teach like this. Listen, there is one thing which we called amount received. Okay. And the second thing is called mileage allowance. Hope you remember. Mileage allowance is allowed expense. Amount received is a taxable benefit. So one thing is added and other thing is deducted. Amount received is added and mileage allowance is deducted. I hope you remember. Mileage allowance is fixed rates given by law, but amount received varies from question. Amount received depends on the heart of your employer and your face. Amount received depends on the heart of your employer. It's employer wish. He can give you any amount. Okay. So in this question, how much employer gave? 45 pence. How much employer gave? 45 pence for 8,000 miles. So you know what will be the amount received? Amount received will be 8,000 into 0.45. Can anybody tell me? What is the 8,000 into 0.45? 3,600. Okay. Now what will be the mileage allowance? Can anybody tell me what will be the mileage allowance? Mileage allowance will also be same. Very good. Mileage allowance will also be same as these miles are less than 10,000. As these miles are less than 10,000, so it will also be same. So in short, the net effect will be zero. The net effect in employment income will be zero. The net effect in employment income will be zero. Are you getting? And I'm telling you once again, no need to show this working at all. No need. I'm showing this working because I'm teaching right now. I'm solving this question for teaching purpose. Okay. And I assume that I have small kids, infants in my class, right? But for you guys, you don't need to do all these stuff, right? So there will be no impact of this mileage allowance. Only salary is taxable. Only salary is taxable. The mileage allowance thing is irrelevant. Okay. Okay. Now there is a dodge coming. Dodge coming. Be active. Alicia's annual motor car running cost will be 6,200 higher if she uses her own car for both business and private journeys compared to using company car. Now look at me. I just told you that when employee drives her own car for the business of employer, so now there will be some depreciation, there will be some oil change, there will be some fuel cost, there will be some cleaning cost, lot of cost. There will be, in short, there will be running cost. So tax department does not allow this running cost at all because they allow you these fixed rates. See, they allow you this mileage allowance. So when you claim mileage allowance, that means you can't deduct the actual cost. I hope you remember I taught you one question. Those who are my students in this class, I taught one question, Ali Patel. I teach one question, Ali Patel in class. Do you remember? Write in the chat box, Ali Patel. Now listen, wait. Thank you. It's okay. Listen, there is a question, Ali Patel. In that question, I discussed this same issue, that actual running cost is not allowed. They allow you the mileage allowance. So right now, for the tax computation purpose, right now I'll compute the tax. So for the tax computation purpose, this actual running cost is not allowed. But yes, this actual running cost, it's a cash flow. It's a cash flow. Actual running cost means it's a cash flow. It's a cash outflow. No doubt it's a cash outflow. And you know, this mileage allowance, this thing, see, this mileage allowance is not a cash outflow. This mileage allowance is not a cash outflow. This thing is a cash outflow. This motor car running cost means you actually paid for the fuel, you paid for the oil change, you paid for the cleaning. Okay, so this is a cash outflow. So now there are some very smart students in my class. They are commenting here, sir, why are you highlighting this as a cash flow? Why are you highlighting this 6,200 as a cash flow? Listen to me, because in the last requirement of this question, we will have to do tax planning. And when we do tax planning, When we do tax planning, we do it on cash basis, incoming and outgoing of cash, incoming and outgoing of incoming and outgoing of cash, incoming and outgoing of cash. Remember. So this 6200 will be used in that requirement. One last thing, and now I'm going to for solution. Listen. Just tell me, in this question, there will be additional income tax? Yes. For 10,000 additional salary, there will be an additional income tax? Yes. Yes. What about NIC? Can anybody tell me, will there be an additional NIC? Yes, because this time employee is receiving cash salary. This time employee is receiving cash salary. So yes, cash salary, there will be NIC, class 1 employee NIC. And yes, if you receive, listen, one extra thing, if you receive mileage allowance, the driving payments, if you receive the driving payment over 45 pence, over in excess of 45 pence, then that thing is also included for class 1 employee NIC. But this time the payments for driving is exactly 45. The payment for driving, listen, the payment for driving is exactly 45 pence. So this thing will not be added. This thing will not be added. This thing will not be added. But yes, for additional 10,000 salary, you have to calculate some additional class 1 employee NIC. Additional class 1 employee NIC. Now, just for your easiness, listen. Can you see the class 1 employee NIC rate? I have written here. My respectable students, can you see the class 1 employee NIC rates? Yes, you can see. So as her existing salary, see here, as her existing salary is 60,000, her existing salary is already 60,000. So that means she has consumed these two bands. She has already consumed these two bands of class 1 employee NIC. So now the additional income will lie in this band. Additional salary will lie in this 2% band. Additional salary will lie in this 2% bands. And to be very honest, I have taught this additional NIC thing in my classes as well. I have taught this additional NIC things in my classes as well. Hope you remember. Okay. So now we are moving towards the next requirement. See the B requirement. See the B requirement. Advice Alicia of the income tax. Again, income tax and NIC contribution means for Alicia, the NIC is class 1 employee. Class 1 employee NIC. Implication for the tax year 21-22. If she receives a gross salary increase of 10,000 and is also paid a mileage allowance. Okay. Okay. Your answer should be supported by appropriate calculation. Listen, if they have written advice, the word advice means you need to discuss something. The word advice itself says discuss something, not just calculation. But yes, they have also written with appropriate calculation. So it will be a mixture of theory and practical. It will be a mixture of theory and practical. So now, first thing, look at here. Additional salary is a taxable income. Yes, it's a taxable income. So your employment income will go up by 10,000. And when your employment income will go up by 10,000, you have to pay 40% tax on it. You have to pay 40% tax on it. So this will be 10,000 times 40%. It's 4,000. Okay. So 4,000 will be your additional income tax. 4,000 will be your additional income tax, right? And now look at me. You have to pay class 1 employee NIC as well as this cash salary. That we calculate class 1 employee NIC on cash salary, cash bonus, and mileage payments received. Mileage payments received over 45 pence. But as the mileage payments are not over 45, so we'll only include this additional salary. And this additional salary obviously will go in the third band of class 1 employee NIC. This additional salary will go in The third band of class 1 employee NIC, it will be 200. So these two taxes, 4,200, 4,200 you have to pay. 4,200 you have to pay these two taxes. You have to pay these two taxes. Now, next, no additional tax, no additional tax on amount received for mileage. As for less than 10,000 miles, approved mileage rates are 45 pence per mile. So amount received will exactly cancel the mileage allowance. They are same, 45 will be cancelled. I have already taught you. So no additional tax on it. No additional tax on it. So this is your requirement B. This is your requirement B. Okay. Did you understand till here? Please write on the comment box. Respectable students, please write on the comment box. Okay. Now we have one last very baby requirement, last easy requirement, easy. Listen, advise Alicia as to which of the two alternative remuneration packages is the most beneficial to her, clearly showing the details of the scenario in your working. Listen. This last thing is always done on cash basis. You have done a question Ali Patel and you have also done other questions in your exam kit. Normally this last requirement is on cash basis, incoming and outgoing. Okay. And cash basis means because of that new transaction, because company offered us two different packages. So for each and every package, you need to think about additional cash flows. Listen. So in the package one, listen, in the package one, we receive a car. Car is not cash. Okay. So forget about the cash. But yes, because of that car, there was a car benefit, which was a taxable benefit. There was a car benefit, which is taxable benefit. And we had to pay additional tax. This 336, sorry, this 1344. This 1344 is the additional tax. This 1344 is the additional tax if you receive car. Nothing else. 1344 is the additional tax if you receive the car. Okay. So look at here. This is requirement C. Look at here. For car provided by employer, only one cash flow, that is additional tax liability, and this is 1344. And see, listen, I'm writing in negative. That means you have to pay a negative amount. You have to pay. So payment is negative. Payment means outflow. So that's why, student, I have written a negative number here. I have written a negative number here. Okay. So for the first route, you have a negative outflow. You have a negative outflow. Okay. Now second route. Second option is very good. There are a lot of things in the second option. Look at me very carefully. Pure cash flows, inflows and outflows. Inflows, you just have to think about payments, only payments, and think over it. First of all, employer will give me additional cash salary of 10,000. So there will be a 10,000 inflow. Just use your brain. There will be a 10,000 inflow. Then employer, as I'm driving my own car for my employer. So employer is paying me for this driving. Employer is paying me mileage payments. How much payments are for mileage? 8,000 miles multiply by 0.45. 45 cents means 0.45. So it's 3,600. This 3,600 is also a cash flow which I receive, which I as an employee receive from employer. It's a payment. Okay. Yes, but mileage allowance is not a cash flow. The mileage allowance which we deduct from employment income is not a cash flow, is not a cash flow at all. Then because of all this, because of this additional salary, we have to pay income tax, and I just calculated that income tax 4,000 is the additional income tax. Income tax is the outflow. Employee class 1. Yes, because of this additional cash salary, there is a 200. There is a 200 class 1 employee NIC. There is a 200 class 1 employee NIC. And one last thing. If we go for this second option, we have to bear some running cost of the car. Running cost is a cash flow. Wait, let me show you. See this. We have to bear some running cost. Look at the screen. We have to bear some running cost. See the screen of 6,200. This is also outflow. This is also outflow. Now you tell me the final answer is positive or negative. Positive or negative. Can you tell me? Can any 10,000 plus 3,600 minus all these? Can anybody tell me the final answer? $3,200. Okay. 3,200 positive. 3,200 positive. Now, I hope you know how to count money, how to count physical cash. So you tell me which option is better in terms of cash flow. In terms of cash flow, which option is better? Obviously, the second option, there is a positive answer. Here you have a negative answer. So the second option is better. The second option is better. The second option is better. But there is one more step, one more extra thing which I would like to tell you, because I teach maths as well. I have taught maths 5 to 6 years in my life. So for maths, you in grade 6, when you guys were in school, your teacher used to teach you integers, remember, with timeline. So let me explain you. With one option you are on negative side, negative 1,344. In the second option you are on plus 3,200. So what is the net benefit of shifting? What is the net benefit of shifting? Let me explain you. Listen, at one end you are at negative 1,344. Wait. Then you will come to 0 and then plus 3,200. Yes, listen. If you compare these two extreme, listen, at one side you are at negative 1,344. So if you leave this option and you go to this, you go to other options. So that means there is a first journey of this 1,344, and then you have this journey of 3,200. So what will be the total? Can you add these two? Can you add these two? The total benefit is 4,544. By accepting cash salary option, Alicia can get net benefit of, what is the number? 4,544. That's it. That's it. You can see the question is done. Question is done. Question is done. I would say that if you are in exam pressure, okay, right now you are not in exam, you are with your teacher. Please listen. If you are in exam, still can't you score 5 marks in this? Out of 10, just 5 marks. I'm asking 5 or 6. You can. You have taken classes. You have done a lot of hard work. So if you score 6 marks, still you are a winner. You have cleared the exam. That's it. What else you want? Now the next thing. Now we are moving towards question number 2. And you know this, you know better, you know, all of you know better this thing, that question number 1 is planning. Now question number 2 is about individuals tax, and then one question for corporation tax. One is individual and one is corporation. Okay, so let's start. Let's start. Please be active. On 31st July 21, on 31st July 21, this question will be, I think, more easier for you. Why? Because the previous question, it was tax planning, lot of usage of mind, and previous question. Now this question is routine. This is routine. I'm sure you guys will be more reactive in this question. On 31st July 21, Dom left his employment with Abacus Limited, where he had worked since 2019. Okay, so almost in the mid of the fiscal year, of 1/4 of the fiscal year, Mr. Dom left the employment. Now one question, listen. Do you know this thing, that employment income is for individuals? Employee is individual, and employment income P&L is always made for fiscal year. Employment income P&L is always made for fiscal year. Look at me, let me recall you something. Employment income P&L is always made for fiscal year. For individuals, property income P&L is always made for fiscal year. But for individual, trading income P&L is for accounting period. You guys don't know anything. You are enjoying movies, seasons, Netflix all day. For individuals, employment income P&L is always made for fiscal year. Right here on your hands. For individuals, property income P&L is also made for fiscal year. But for individual, trading income P&L is for accounting period. That's why in trading income we do basis period. So right now this question is about employment income. So fiscal year must come in your mind. Listen to me. If I round off, this is your fiscal year: April, May, June, July, August, September, October, November, December, Jan, Feb, and March. I know the fiscal year is 6th to 5th April, but I'm rounding off. Right now I'm rounding off, so it will be April to March. My respectable students, it will be April to March. So now this guy Dom left the first job on which date? On 31st July. So that means the old job he did in first 4 months of the fiscal year. First 4 months of the fiscal year, he was doing old job. Okay, right? Now, where he had worked since 2019, that's not my headache. Dom started a new employment with Brass Limited. That means he is switching job. So from 1st August, yes. That means he did job all 12 months. He did job complete fiscal year, but first 4 months with existing employer, last 8 months with the new. First 4 months with existing employer, and last 8 months with a new employer. Okay, so nothing difficult. Okay, but yes, you need to apportion things. If they will give you annual means 12 months. If they will give you annual figures, then you need to apportion things. Okay, now let's start. This is the first employment. Now this question I'll solve on Excel. But right now, first I'll discuss each and everything. And you guys can listen to me very carefully. And then I'll go to the laptop thing and I'll solve it on the Excel for you. Okay, because this is practical. Previous question, it was just theory mode. Dom was paid a gross annual, what do you say? Annual salary of 64,800. But he did job for 4 months. with Abacus Limited. And this is annual. So what do you think? 4/12. Yes, very good. This 64,800 will be 4/12. Not difficult thing, easy thing, honestly easy. On 15th May 2021, Abacus Limited gave. Now wait, let me teach you with that style. You know, when I teach employment income, I emphasize on one thing. I say employment, the heart of employment income is two things. Number one is benefits. Number two is deduction. Benefits, deduction, benefits, deduction, benefits, deduction. Benefits means whatever you are receiving from your employer. You are employee, and whatever you are receiving from your employer is benefit. There are two types of benefit. One is taxable benefit and one is exempt. And deduction means whatever employee is paying, or whatever burden is coming on employee, that is deduction. Okay. And deductions are also of two types. Number one is allowable deductions, and number two, not allowed deductions. Remember, you don't remember anything. You guys are very rich people, extremely rich. You have a lot of pounds to pay exam fees. Now, so on 15 May 2021, Abacus Limited gave Dom a briefcase of £100 as a reward for passing professional exam. Now, first thing, let me tell you how to handle it. You guys have gone through the exempt benefit list. This thing is not part of exempt benefit. First thing, this story is not at all part of exempt benefit list. That means it is taxable. I repeat, this story, on passing exam, if you are giving gift to your employee, this is not at all exempt. It is not part of exempt benefit list. So automatically it is taxable. First evidence. Second, this is a small gift, briefcase and all trophies, chocolates, small gifts. There is a topic in your kit, in your book, trivial benefits. You remember? Anybody knows about this trivial benefits? Anybody knows about trivial benefits? £50. It is exempt if it is less than £50. It is exempt if it is less than £50. But as this is greater than £50, so automatically taxable. Trivial benefits like chocolates, bottle of wine, party, and all these things, small gifts, birthday gift like this. So low value benefit, yes. So if employer is giving such trivial benefits and if it is less than £50, then it is exempt. But here it is greater than £50, it's £100, so automatically taxable. So you can pick in either way, right? I have given you two evidences. So this £100 is taxable. During the tax year 21-22, Dom drove 900 miles on Abacus Limited company business using his private motor car. Once again, twice in this paper. Employee using his own private car for the business of employer. Employee is using his own private motor car for the business of employer. So now first thing, as a deduction, mileage allowance is allowed. And you know, sometimes you receive payment from your employer. Abacus Limited reimbursed how much? 35 pence per mile. So now wait. There are two things. Number one is amount received. Number one is amount received. Listen. So 0.35 multiplied by 900. How much is the amount received? 900 into 0.35 is 315 is the amount received. And how much is the mileage allowance? You know, as this is less than 10,000 miles, 900 miles is less than 10,000 miles. So it's 45 pence. So 900 into 0.45 is equal to how much? 405. So there will be 405. So there will be a negative number. What is the negative number? How much? 90. 90 is a negative, yes. So listen to me. If I'm not forcing you to do this long calculation, you can directly do like this. Listen, 35 means 0.35 less 0.45 negative 0.1. Negative 0.1. Negative 0.1 multiplied by 900. Negative 0.1 multiplied by 900 will give you negative 90. Negative 0.1 multiplied by 900 will give you negative 90. Negative 90. You can directly deduct 90 from. You can directly deduct 90 from your employment income P&L. You can directly deduct 90 from your employment income P&L. Okay. Right. Then so this is about the first thing. This is about the first person, the first job, first 4 months job. Now let's come to the last 8 months. Brass Limited. Brass Limited. Don't sleep. Don't sleep. Don't sleep, please. What is written? Dom was paid a gross annual salary. Dom was paid a gross annual salary of 7,600 once employed by Brass Limited. Again, annual salary. Again, annual salary is given annual, but he did job only for 8 months in the fiscal year. For this new company, he did job for 8 months in the fiscal year. So 76,800 multiplied by 8 upon 12, 76,800 multiplied by 8 upon 12, right? Then on 1st September 21, he was provided. Now wait, hold. The new car is provided from 1st September. So September, October, November, December, Jan, Feb, and March. 7 months. 7 months you in this fiscal year. 7 months in this fiscal year. 7 months in this fiscal year. Hope you can count. Now, first thing, he was provided. Employer is providing. Employer is providing. That means employee is receiving. Again, this is benefit. Point number 2 is benefit, not deduction. Benefit. Okay. And this is car benefit. Now see, it's a diesel car. Diesel car, but you remember I taught you one thing, RDE, real driving. See, this car does not meet RDE standard. This car does not meet R. Very good. Some students are performing excellent. This car does not meet RDE2. That means this is real diesel, the bad diesel car. So now for 55 grams, the rate is 19%. For 55 grams CO2, the rate is 19%. And for each additional 5 grams over 55 grams, 1% will be added. Now wait, as this is 122, so 122 will write 120, round down. So 120 less 55 will be, I think 65. Yes, 120 less 55 will be 65. So 65 divided by 5 is, I think, 13%. So 19 plus 13% will give you, 19 plus 13 is 32%. Okay, 32%. Can anybody calculate this 32% rate? You are in revision days. 32%. Okay. So now how you going to calculate this car benefit? The car benefit will be 25,200. 25,200 is the list price. 25,200 multiplied by 32% into 7 upon 12. 25,200 multiplied by 32% into 7 upon 12. Okay, very good. And don't worry, I'll be solving this on Excel. So this is simple. Now, Dom was provided with fuel for private use in respect of this motor car. Now, car with fuel. For fuel benefit, there is a constant number. For fuel benefit, there is a constant number 24,600. So this will be 24,600 multiplied by the same percentage. The same percentage is 32% into 7 upon 12. 24,600 into 32% into 7 upon 12 will be your fuel benefit. Next, Brass Limited. Number 4. Brass Limited has a workplace nursery on its premises, which is available to all employees. Workplace nursery for kids. You know, ladies also come for job. So ladies sometimes have infants or small babies. So normally employers give this nursery benefit. Okay, workplace nursery, and workplace nursery is totally exempt. Workplace nursery is totally exempt, totally exempt. Okay, so Dom's child took up a place there on 1st January 02. Dom does not pay anything. Okay, it's free from the employer. Although the nursery fees payable by the members of the public for any available places are 700, this is exempt. This benefit is exempt. Workplace nursery is exempt. Okay. So exempt means you'll write dash 0. During the tax year, now don't sleep, please. Now strictly don't sleep. Suddenly they change it. During the tax year, DOM paid, employee paid. Now you tell me this is benefit or deduction? First thing, is this benefit or deduction? This is deduction because it's going out from employee pocket. Be very careful with this. Whenever you are doing employment income, be very careful with these two words, benefit and deduction. Benefit and this is deduction. Now deduction are of two types, allowed or not allowed. Allowed or not allowed, this is allowed. Listen, 300 to renew the membership of professional body. This professional membership is the requirement. Yes, like ACCA, CFA, ICAEW membership fees, these all membership fees are allowed because you can't do job without your membership. You cannot do job without the membership, Next. So these two are the two employment income. My dear student, 2 P&L we have to make, small P&L, not big P&L, not small P&L, one for Abacus Limited employment income, one for Brass Limited. Not a to be very honest, this is a bonus question. I am telling you, this is bonus. They have given you basic employment income. They are forcefully clearing you. Now, during the tax year 20, DOM receives savings income. Saving income is the interest income. You know, for interest income, examiner use the word savings income. All of you, please listen. All of you, please listen. All of you, please listen. Saving income means interest income. Examiner nowadays use the word interest income is 700 and dividend income is 3000. So these all are normal tax. I have a question. Do we make P&L for interest and dividend income? Do we make P&L for interest and dividend income? Yes, no. Very good. No. They directly go in these columns. Remember the 3 column NS, interest, non-saving interest, dividend, they directly go. But yes, for property income, we make P&L. Employment income, we make P&L. For trading income, we make P&L. Yes. Okay. So, and finally, during the tax year 21-22, DOM made a charitable gift. Very easy. Very easy. Gift aid donations. Gift aid donations are not an allowed expense from any P&L at all. But yes, there are 3 steps. Number 1, grossing up. You will do divide by 240, divide by 80 into 100. It's 300. Grossing up, then ANI reduction and then band extension. Crossing up, ANI reduction and then band extension. Okay, now what they are asking, read the requirement first. Calculate the DOM's income tax liability for the tax year 21-22. Now, I know they have directly asked you income tax, but you know, when I teach tax, I teach with 3 steps. I always recall in the class 3 steps. The first thing, whenever somebody asks you to calculate tax, first calculate incomes. Whenever somebody asks you to calculate tax, then first calculate income. So first you need to calculate the employment income. First you need to calculate the employment income, my dear student. And then you need to calculate tax on that. Then you need to calculate tax on that. Okay. Now, secondly, they are asking calculate the total amount of employee class 1 NIC. Employee class 1 and that DOM will suffer. Now you have to calculate total NIC. Total NIC you have to calculate. Listen. Class 1 employee NIC is calculated on salary. Salary, yes, there is a salary. Bonus, there is no bonus. And mileage driving payments, mileage driving payments over 45 pence. So it's less than 45 pence in this question. You just receive 35 pence from your employer. You just received 35 pence from your employer. So it won't come. Bonus is not there. So only salary. Only salary. But yes, you have two different salaries. So one is 4/12. One salary is 4/12 and other salary is 8/12. Wait, let me tell you here the number, because right now I have pen. When I'll shift to my laptop, I won't have pen. Listen, this will be 64,800 into 4/12. Wait. What is the amount? Can anybody tell me? 64,800 into 4/12? 21,600. This is the first salary. And for the second one is 76,800. 76,800 into 8/12, 51,200. Simply add these two salaries. Simply add these two salaries. 72,800. Yes. Is this? Yes, you have to calculate very basic thing. You have to calculate class 1 employee NIC on 72,800. You have to calculate class 1 employee NIC on 72,800. Okay. So this requirement is not about planning, normal requirement, normal working, to be very honest, normal working. And let me show you class 1 employee NIC rates again. This is the rates. Wait. See, this is the class 1 employee NIC rates. Even you know this, even this will be given in the exams as well. I told you, these rates will be given to you in the exams as well. And you guys can learn also. So I will use these rates. I will use these rates for class 1 employee NIC. Hope you guys don't have any issue then. Now the last requirement is the bonus mark, bonus 1 mark. State which payee form for Abacus Limited will have provided to Dom when his employment with the company ceased. When you leave employment, tell me. Whenever you leave employment, there is one special form I always teach in class. No. Whenever you leave employment, which form you receive? P45. At the time of, that's a one-off form, P45. P45. I always teach P45. This is bonus mark. Whenever you leave a job, you receive this form P45. Form P45. And you know, this is mess. I sometimes say this is the experience letter. This is the experience letter because this P45 shows that you have paid tax in past and you have done job, and now you will give this to your new employer, and when he puts the detail in the HMRC website, automatically he gets the connection of your past records. So yes, you need to give to your new employer. See what DOM will have been required to do with this form. Excellent. So I repeat, whenever you leave job, you receive a form P45. In my lectures, it is covered. You receive form P45 from your employer. You receive form P45 from your employer. Okay. And then you submit it to your next employer. Okay. Now I'm going to move. Listen, for all of you, if you want to take the picture of the question, you may. If you want to take the picture of the question, you may, because now I'm going to shift myself. I'm going to shift myself to, if you want to take the picture of this question, you may, because now I'm shifting the screen towards Excel. Okay. And now I have explained you everything. So be very active, please now. Don't be a dumb child. Can you see my laptop screen? Can you see my laptop screen? Where is the chat box? Wait. Yes. Yes, you can see my laptop screen. And please turn off your cameras. Wait. So now we have a salary. Okay. So we are going to calculate, first of all, we are going to calculate salary. Your salary will be your, let me enlarge the screen. Okay. I think it's enough. It's good now. Your salary will be, how much will be the salary? The salary was 64,800. 64,800 into 4 upon 12. 64,800 times 4 divided by 12. Now one thing. If you want to show the working on the left, see, I am showing the working 64,800 into 4 upon 12, and then I can work in the cell as well. Then I can work in the cell as well. Obviously, you have to apply the formula in the cell. So if you do these two things, that is also acceptable. But if you only want to do this formula, like, see, what I'm doing it, 64,800 in times 4 divided by 12. 21,600. Okay, so if you only do this cell working, that's also enough, because your ACCA examiner clicks on the cell. Your ACCA examiner clicks on the cell and checks and check the working. Okay, now exam reward briefcase. You remember he received a briefcase of 100. That's full-time taxable. Then approved mileage claim. Approved mileage claim. How much was that? 35 less 45 pence times of 900 miles. Remember? So this will be a negative 90 number. This will be a negative 90 number. Remember? Negative 90 for mileage allowance, because amount received was less than the approved rate. So let's total it. So 21610. The first employment income which you calculated, the first employment income which you calculated, the first employment income, the first employment income which you calculated is 21610. Okay. Now the second one. Now again the salary. Salary is, I think, now 76,800. 76,800. So you will do 76,800 times 8 divided by 12. 76,800 times 8 upon 12. Now come to the cell. 76,800 times 8 divided by 12. Okay, 51,200. Now come for the car benefit. Car benefit, the percentage we calculated was 32%. The percentage we calculated was 32%. So it's 25,200. 25,200 is the, sorry, 25,200 is the list price times 0.32. 0.32 equals 25,200 times 0.32. Okay. Sorry, I forgot one thing. 25,200 points 0.32 into 7 upon 12. 7 months. 7 months I forgot. See, mistakes we can do. Anybody can do mistakes. 25,200 into 0.32 times 8 divided by 12. Sorry, 7 upon 12. 7 upon 12 because from September. See, 25,200 into 0.32 into 0.7 upon 12. My dear student, right now I'm just doing typing because I have explained you already. I have explained you already everything. It's 4704. Now fuel benefit is 24,600. Fuel benefit is 24,600 into 0.32 into 7 divided by 12. 24,600 times 0.32 times 7 divided by 12. Please check. Okay. Workplace nursery is exempt. Write 0. Professional subscription is basically paid by DOM. So it's an allowed expense. It's an allowed expense. So my dear students, this will be negative 300, negative 300. Yes, negative 300. Okay. So now let's add the second column as well. Let's add the second column as well. 60196. Now, what will be your total employment income? This is your first income. See, this is your first income. This is your second income. What will be your total employment income? This cell plus this cell. If you add these two cells, you will get total employment income of 81806. 81806. 81806. My dear students, we have calculated total employment income. We have calculated total employment income 81806. Now, employment income is done. There is no other PNL. There is no other PNL in this question. There is no other PNL in this question at all. Sir, what about interest and dividend? They directly go in the columns. They directly go in the columns. Let me show you. Let me show you. So first of all, this is J53. Okay. You will see this. Look at this. Non-saving equal J53. I'm writing the name of cell. So complete employment income will come in non-saving. What about the interest? Remember saving income. Saving income was I think 700 in this question. And dividend income was 3,000. Okay. If you add these all, this will be 81806. This will be 700. And this will be 3,000. Okay. 81806 plus 700 plus 3,000. Now, no need to do. Even the examiner is not doing the irrelevant things now. Tell me, what will be your net income? There is no qualifying interest in this question. There is no qualifying interest in this question. That means this 81,000 plus 3,000, it will be around 85,000. Your net income will be around 85,000. And if you go for side working, no need to do it. There will be some gift aid donation. So gift aid donation is 300 or something. So that means ultimately your ANI is less than 100,000. Ultimately your ANI is less than 100,000. And whenever your ANI is less than 100,000, my respectable students, you have a fixed personal allowance of how much? 125. Tell me. You have let me see the chat box. You have a fixed personal allowance of 12570. Very good. So simply write the personal allowance, and enjoy the game and start the show. Less 12570. So this is your 69. And then this will be as it is copied. This will be as it is copied. Okay. Now, first of all, you can calculate the total taxable income. You can calculate the total taxable income to check the tax status of the person. Tax status, that the person is higher rate taxpayer or basic rate taxpayer or what. So wait, shift and these three. The total taxable income 7272936. Can anybody tell me this guy is basic rate taxpayer or higher rate taxpayer? This guy is basic rate taxpayer or higher rate taxpayer. This guy is HRTP, higher rate taxpayer. This guy is higher rate taxpayer. This guy is higher rate taxpayer. Higher rate taxpayer. Okay. So why am I so much interested in the taxpayer's status? Why I am so much interested in the taxpayer's status? Listen, because listen, because interest NRB is dependent. Interest NRB is dependent on the person's taxpayer status. As this guy is higher rate taxpayer, so only 500 interest NRB is available. Only 500 interest NRB is available. Now, one more thing, one question from you, all of you. As this guy is higher rate taxpayer, so there will be no calculation of additional rate in this question. So only first and second band is relevant. Now, let's do the band extension. Hope you remember the gross gift aid. Hope you remember the gross gift aid. Gross gift aid was 300. In this question, gross gift aid was 300. How? The net gift aid donation was 240. The net gift aid donation was 240 divided by 18 to 100 is 300. So let me tell you the band extension amount. It's 38,000. And the second band will be this. Okay. First band is 38,000 and second band is this. Now, one good news. Can anybody tell me what is the final answer of non-saving column? What is the final answer of non-saving column? What is the final answer of non-saving? It's 69236. So we should say thank God. Why? Because it is more than 5,000. It is more than 5,000. So in this question, there is no 0% interest band. Remember, there is one 0% interest band of 0 to 5,000. That band will not be applicable in this question. So you will simply, or you can do it yourself. Tax computation is not a big issue. You have done many questions. So now, how are you going to do it? Listen, your non-saving taxable income is 69236. So you will pick this income and you will knock the band. You will knock the first band. That is 38,000. So your income is higher. 69236 is the higher income and your capacity of first band is only 38,000. So you will eat up. Complete first band. You will eat up. Look at the screen. Please. So this will be, you will write here NS. First of all, this will be 38,000 equal. I'm directly doing the tax working. Okay. 38,000 times first band rate is 0.2. 38,000 times 0.2 is 7,600. Okay. Now from 69236, you have calculated tax on 38,000. How much is left? From 69236? How much is left? 31236 is left. 69236 minus 38,000. You have calculated tax on 38,000. Now, for this 31236, for this 31236, what will be the tax rate? The tax rate will be 0.4, 40%. Okay, see this. Sorry, it's a mistake, I think. No, it's not a mistake. 1249. Okay, it's 40%. So 12494.4. So you have done the non-saving. Now go for interest. Now go for interest. For interest, remember, first you will have to do NRB. NRB. Interest NRB is calculated on the basis of taxpayer's status. So as your taxpayer is higher rate taxpayer, so 500 interest NRB is available. So what you will be writing? Equal to 500 multiply by 0. Multiply by 0. Obviously, it will be 0. Then after that, tell me how much interest income is there. See, how much interest income is there? Interest income is 700. So out of 700, 500 is 0%. And obviously remaining 200 you will be doing with 40%, as you are right now in the second band. As you are in the second band. So it will be 80. Interest income tax is done. The third thing is dividend. Hope you remember, in dividend income, there is clear rules. Always for dividend income, always first 2000 multiplied by 0%. Dividend income NRB is available irrespective of your tax status. Remember? So let's do it. So it will be 2000 times 0, it's 0. And then for 1000, now all of you, I have a quiz. What is the third band tax rate of dividend? We are in the higher rate band. Sorry, second rate. We are in the higher rate band. What is the higher rate band of dividend? It's 32.5%. Higher rate band of dividend is 32.5%. Let me do it. Sorry. Equal 1000 into 0.325. Okay. So that's the end of your all taxes. That's the end of your all taxes here. So what will be your total ITL? What will be your total ITL? Can anybody tell me what will be your total ITL? This will be 20499.4. 20499.4. I think there is no pay in this question. No pay, no tax credit at all. So your income tax liability is 20499. $20499.4, right? 20499.4. Okay. Did you understand it? To be very honest, I should have given this work to you. I should have given this income tax computation work for you, because you guys are expert for this income tax. And see, even in the first chapters of my course, I say that examiner normally test this skill of income tax computation in every exam. All of you, please comment on the chat box. Did you understand this question? Because we have done the major 12 marks requirement. Now, next thing is NIC. But before we do NIC, listen. Before we do NIC, first tell me what's your total salary, because NIC will be calculated on salary now. What will be your total salary? 21,600, 21,600C and 51,200. 21,600 and 51,200. I highlighted you. When I was on iPad, I was writing on pen. I just highlighted you that class 1 employee NIC is computed on cash salary, cash bonus, and driving mileage, driving payments over 45 pence. There is no over 45 pence mileage driving payments. There is no bonus, but yes, salary. So salary is 51,200 of last 8 months, and first first 4 months, it's 21,600. So my dear respectable students, if you add these two, like you add 21,600 and 51,200, if you add 21,600 and 51,200, this will become 70, this will become 72, this will become 72,800. Okay, 72,800, keep it in mind. Now I have already told you the class 1 employee NIC rates. Let's quickly calculate class 1 employee NIC. Look at here. I've already done some working. Look at here. For class 1 employee NIC, right now in this screen, I can't write the rates. I already told you. 0 to 9568. Listen, first 9568, it's 0%. 9568, it's 0%. It's 0%. Okay. So first 9568, it will be 0. And now from 9568 to 50270, from 9568 to 50270, it's 12%. It's 12%. So see, I have written here. Into 0.12. Okay, simple. It's very simple. This is the second man. And now, as our income was our salary was this amount. See, let me write 72,800. Our salary was 72,800. That means we should come in the third band also. We should also do calculation in the third band. So how we'll do third band? We have already calculated NIC till 50270, till 50270. So how much is the excess? Equal to 72,800 minus 50270 into 0.02. 2% means 0.02. Okay, so this is something here, and that's your class 1 employee NIC. I hope you can understand this. This is not a big deal. This is not planning. This is not planning. Normal class 1 employee NIC calculation. Even you can do with your pen. If you can do. The amount of salary is 72,800. The amount of salary is 72,800. Amount of salary is 72,800. Okay. Okay. Now, the next thing is there is only one requirement which I told you. Part C, form P45. Remember, I've written here. About form P45, I have written here. See, form P45 would have been provided by Abacus Limited to DOM. DOM should have then forwarded this to new employer. You have to transfer this to new employer as well. Okay, right? I hope you understood it. I hope you understood this question. I hope you understood this question, right? Okay. Let's take a 5-minute break. Let's take a 5-minute break. Okay. Okay. So now we are starting question number 3. We are doing question number 3. Question number 3 now. Question number 3 is about corporation tax. Corporation tax. I think this is more easier. It's all about the trading. See the pattern of examiner. Examiner has tested employment income in question number 2. Now they are testing trading income. They will test trading income with companies. Everything, almost all allowed, not allowed list will be tested here. So Crumble Limited, Crumble Yes, I'll post this on YouTube. Don't worry, I'll post. But please concentrate now. Crumble Limited has brought forward its accounting reference date to 31st March. Its summarized statement of profit and loss for the 9 months. For the 9 months, look at here. For the 9 months, that means right now this period is 9 months period, and it is ending on 31st March. This period is 9-month period, and it is ending on 31st March. So it must be starting on 1st July. So this is your period. Listen to me. 1st July 21 to 31st March 22. You must have this much skill. See, when your period is ending on 31st March 2022 and it's a 9-month period, it's a 9-month period. So obviously it must be starting on 1st July 21. 1st July 21. Okay. So these are some working. See, you have a gross profit, then you have a professional fees with reference of note number 1. Then you have repairs and renewals. You have qualifying charitable donations. You have other expenses. And finally, you have operating loss. You have operating loss. Okay. Then you have other income, property income, gains. This is gains. With on shares, you have a capital gain. You have then interest payable, which is called finance cost, and loss before tax. This is the main first thing. Okay. Now, let's move to the second requirement. Let's move to the second page. Just have a look at this page. 1 second. Look at this page. Okay. Now, my dear students, this is note number 1. Note number 1. The breakup of things. The breakup of things which you saw in note. What is note number 1? They are saying the professional fees include accountancy fee. Accountancy fee 6,200. Accountancy fee is normally allowed, but again, some dodge. See the notes. The accountancy fee 6,200 includes 2,800 in respect of the additional work arising as a result of compliance check by HMRC into Crumble Limited self-assessment tax return for the year ended 30th June 2020. No additional tax was payable as a result of the compliance check. That means we were not in fault. We were not in fault, and this is normal tax calculation. This is normal tax calculation. Listen, if you remember the trading income chapter, all of you be active now. We have taken the break. If you remember the trading income chapter, in your trading income chapter, you know, normal tax computation and all these costs are allowed. Normal tax work, tax consultant fees for normal work is allowed. But yes, if you are taking a special tax advice for tax avoidance or tax evasion, then that's not allowed, and tax department does not like that. So this is normal tax computation cost. So this is perfect. This is allowed. Okay. So this 6,200 is full-time allowed. This 6,200 is full-time allowed. And I hope you remember the rules. For any expense which is allowed, we write 0. For any expense which is allowed, we write 0. Now, legal fees in connection with varying the terms of the Crumble Limited loans. See note 6, but I would tell you that hope you guys remember the trading income chapter rules. Legal fees for loan is allowed, but legal fees for equity is not allowed. Equity means owner is involved. So this is allowed. Legal fees in connection with the issue of share capital, never allowed. Equity not allowed, no relief on equity. Then legal fees in connection with the registration of trademark, allowed. This is allowed. And let me give you one logic for this. They allow this just to motivate you to register your trademarks, because they will earn through registration fees as well. Tax department will earn, government will earn through registration fees as well. Okay. So registering your trademark is an allowed expense. So out of these 4, 3 is allowed, 1 is not allowed. 3 is allowed, 1 is not allowed. Okay. Next, repairs and renewals 13100. Constructing a new car park next to the company's business premises. There was previously no car park, so this is the improvement. There was no parking, so they establish, they construct a new parking, so this is something new thing, so this is improvement, not allowed. Improvement not allowed. Remember, even I taught you improvement in property income as well. Then repairing the wall of an office building after this is allowed. What is this? Look at the screen, look at the video. The wall was perfect, and because after some months there was a damage, so it came down and you fix it to bring it to original condition. So if you bring things to original condition, then this is called maintenance. This is called maintenance, and it is allowed. So in this note, the first one 7300 is not allowed. The second one 5800 is allowed expense. 5800 is allowed expense. Okay. Now note number 3. Qualifying charitable donations. Crumble Limited paid the qualifying for 3400. This is not allowed from trading income. This is not allowed from trading income, but this is allowed from total profits. Remember the company's format. In corporation tax format, when you go to total profits, then QCDs are allowed. Then qualifying charitable donations are allowed, but not from trading income. It's not allowed from trading income at all. It's not allowed from trading income at all. Then note number 4. Note number 4. Other expenses. Removal expenses to company's new premises. This was, yes, it is allowed. If you are, remember I gave you this example in my normal course. If you had a 500 square yards office, Bangalore, and you are shifting to another 500 square yard office, so it's allowed. This is not an expansion, but from 500 square yard to you are moving to 2000. So this is improvement. If it is an expansionary move, then not allowed. If non-expansionary move, then allowed. Fine, fine, fine. Fine is always on bad guys, and the government does not support bad guys. So this is not allowed. This is not allowed. Okay. Remaining expenses full allowable. Okay. So till now, this was the end of trading income. This was the end of trading income of this question. This was the end of trading income. Now the next note is property income. This is, to be very honest, easy marks. But one concept, you must know accounting as well. Listen. Even I promise you guys, listen to me. I will send on your WhatsApp group. I have written many differences of individuals and companies tax. Individuals and companies tax. There are many differences on individuals and companies tax. Individuals and companies tax. Okay. Individuals, listen to me. In individuals, property income is taxed on cash basis. In individuals, property income is taxed on cash basis, pure inflows and outflows. But for companies, property income is taxed on accrual basis. For individuals, property income is taxed on cash basis. For companies, property income is taxed on accrual basis. Companies, individuals cash basis, companies accrual basis. Now wait. Just write your accounting period. Just write your accounting period. I have already told you in this question, the accounting period is 9 months. In this question, the accounting period is 9 months like this. See, July, August, September, October, November, December, Jan, Feb, and March. July to March, July to March, July to March. Accounting period is July to March. Okay. So tell me, read this line. On 1st July, insurance for the year ended. See, you paid insurance. This is for 12 months insurance you paid. From this 1st July to next June, you paid from this 1st July to next June. Just honestly think about it. Out of this 12 months, how many months lies in your accounting period? Out of this 12 months, July is this July to next June, 9 months. 9 months lies this 9 months. See, This 9 months lies in accounting period, remaining 3 months outside the accounting period. So what you will do, you will do here 9 upon 12. You will only include insurance 9 upon 12. Are you getting, students? Students, are you getting? 840 is the insurance. 840 is the insurance for 12 months. Open your eyes. 840 is the insurance for 12 months. And right now we are not following cash basis. We are following accrual basis. So we need to count months. In our accounting periods, there are only 9 months. So what you will do, 840 is for 12 months. You will multiply it by 9 upon 12 to calculate 9 months insurance expense. Okay. Now, rent for the, listen to me, rent for the 6 months ended 31st May 2022. This is the rent of 6 months ending 31st May. Now look at here. Look at here. Look at here. So 6 months ending May. 6 months ending May. Sorry. This is May. The 6 months which are ending in May. May means May, then April, then March, Feb, Jan, and December. These are the 6 months. These are the 6 months ending 31st May 2022. Now, my respectable students, please think over it. How many months lies in your accounting period? These 4. These 4 lies in your accounting period. These 4. April and May is in the next period. April and May is in the next period. So in accrual basis, you have to see how many months service you have provided now. How many months service you have provided now? How many months service you have provided now? Okay. So what you will do, 6,600 into 4 upon 6. 6,600 is for 6 months and you need to calculate for 4 months. Okay. Only 4 months rental income lies in your period. And finally, a dodge. Security deposit for 2 months. Security deposit is not an income. Security deposit is not an income. Why? You receive security deposit and once the tenant leaves, you return them. You return them. So it's not your income. Security deposit is not your income. We have discussed this in class. So only 2 things. This line and this line is relevant. This is irrelevant. This is irrelevant. I hope you understood the property income part. I hope you understood the property income part. And you know what will be the property income? 4,400 is your rent. 4,400 will be your rent. And I think 630 is your insurance expense. If you take difference, you will get net property income. You will be getting net property income. Did you understand? Please write on the chat box. Did you understand? If yes, then write on the chat box. Okay, now please. Super easy. One thing is easy and one is super easy. You know, for companies, what is the format for gains? In companies, the format for capital gain is DP, less cost, unindexed gain. And from unindexed gain, you less indexation allowance, you get chargeable gain. That's it. Right? But sometimes, you know, you can do directly. Either it is okay if you write first less cost and then indexation allowance, or you can directly deduct index cost from DP. You can directly deduct index cost from DP. When you deduct directly index cost from DP, you will directly get the gain. See the question. On 22nd December 2021, Crumble Limited sold 1% shareholding in an unconnected for, this is DP. DP is 25,200. Okay. The shareholding had been purchased. This is original cost. And this is, and its index cost was this. Which cost should I less? I will deduct index cost. I will deduct directly index cost. So automatically I'll get chargeable gain. No need to do in more steps. No need to DP less index cost. DP less index cost will give you chargeable gain. DP less index cost will give you chargeable gain. To be very honest, these questions are not difficult. There are more difficult questions in your kit. Is you can see this is easy. So it's a bonus thing that you can easily clear the paper if you are just active. Now the next question, the next part. Listen, for companies, listen to me. Interest expense and interest income, everything is on accrual basis. For companies, interest income and interest expense both are on accrual basis. Both are on accrual basis. Don't forget, interest income and interest expense both are on accrual basis. Listen to me. Now you tell me first you tell me what's your accounting period. All of you, come on actively. 9 months, only 9 months. This is the accounting period. This is the accounting period from 1st July to 31st March. Don't forget, 1st July to 31st March. Yes, be active. The interest payable of 8750 is in respect of the company's loan notes which were issued on 1st January 2014 and were due for payment on 31st December 2021. Yes. So the loan was due on for repayment on 31st December 21. However, Crumble Limited has varied. The terms has changed. Varied means changed. The terms of the loan notes so that they are now repayable on 31st December 2026. Now the loan has been extended. At the same time, the annual rate of interest payable was reduced from 7 to 4% with effect from 1st January 2022. Yes, we have negotiated with the providers of loans, so they have reduced our rate. Now, see, this line is important. Interest of 8750 was paid on 31st December 2021 in relation to the 6 months. Okay. So first 6 months interest is clear, 8750. First 6 months interest is 8750. And what there? And interest of the 6 months period ending 30th June will be 5,000. Now the next 6 months interest will be 5,000. Next 6 months ending 30th June means January to June. January to June interest is 5,000. Do you think our accounting period includes till June? Our accounting period ends on March. So for these 3 months, we have to calculate. Listen to me. They are saying the remaining interest is for next 6 months. But in our accounting period, now only 3 months will match. So we'll only include 2,500. So 8750 plus 2,500. What is our interest expense? Tell me. What is the relevant interest expense for us? 11250. Very good. 11250. So my dear students, look at here. We have to do calculation on accrual basis, and our accounting period is 9 months. Our accounting period is 9 months. So they are clearly saying, see, for the first 6 months period, it is 8750. And next 3 months, it's 2,500. So automatically 1.250. Did you understand this point? Please tell me. Did you understand this point, students? Please tell me. Okay. Now wait one. Very important line. The loan notes were issued to finance the company's trading activities. The loan has taken for trading purpose. So yes, it is allowed from trading income. It is allowed from trading income P&L. Now one more dodge. It's conceptual. Listen. If I see the first page of the question, this is the first page of the question. If I start question from this loss, if I start question from 187,800, that means the finance, see, this is the interest. That means interest has not already deducted from this number. Interest has not already deducted from this number. So I have to deduct complete interest in the question. You're not getting. If a certain, listen, this is a concept. If a certain expense has already been deducted, if a certain expense has already been deducted from our profit and loss, and that expense is allowed by tax department, then we do nothing. We do nothing because already deducted. But if, listen again, if a certain expense has not yet deducted by the accountant, but when we go to tax department, they say, okay, we allow it. So you have to deduct it. You have to deduct it because not already allowed by accountant. It has not already it has not already deducted by accountant. So if I start question from this number, look at this number. If I start question from 187,800, I have to deduct the interest myself because not already deducted by question. This is a technical concept. And I've seen in my life, many students do this mistake. Even examiner has written comment in the examiner report about this. Be careful. Be careful. Now, next thing is capital allowance. Next thing is capital allowances. There is no capital allowance. Okay. Forget it. Year ended 30th June 21. See, we have this year, this current accounting period is 9 months. No doubt, current accounting period is 9 months. But the previous accounting period is year. See, they are using the word year. Year means 12 months. Year means 12 months. Year means 12 months. So the previous accounting period is 12 months period. Previous accounting period is 12 months period. And they are giving you the profit of previous accounting period. See, for the year ended 30th June 2021, Crumble Limited has taxable TTP, has TTP of 166,300. Corporation tax of this amount has been paid in respect of these profits. Now, I have a quiz. Why examiner is giving you last 12 months TTP? Why examiner is giving you last 12 months TTP? Can anybody tell me? Why examiners? Can anybody write? No, not for this. One more answer you can give. Why they are giving you? Yes, loss relief. Because look at here. If you, as this, our trading operations are in losses. We have a trading loss in this question. We have a trading loss in this question. So, you know, you hope you remember this relief. Trading loss can set off current year total profits. Trading loss for companies, I'm talking about companies. Trading loss set off current year set off total profit first, and then go to last 12 months total profits. Current year total profits first, and then last 12 months. And you know, in companies, you must follow this order. In companies, you must follow this order. Do current year first and then 12 months back. Do current year total profit first and then go 12 months back. Remember this. Current year total profits first and then 12 months back. This relief, we have to talk about it. Okay. Then now read the requirement. There are 3 requirements in this question. There are few requirements in this question. Look at here. Listen. Calculate Crumble Limited tax adjusted trading loss for the 9 months period 31st March 2022. This is all practical requirement, allowed, not allowed. Easy requirement. Listen, your computation should commence with operating loss figure. C. Always read the instruction that from where you have to start. Always read the instruction from where you have to start. So you need to start from operating loss figure. That is 187,800. You need to start from operating loss figure, that is 187,800. And should also list all of the items referred in notes number 1, 2, 3, 4, and 7, indicating the use of zero. Okay. For this part of the question, you are not required to refer note 5 and 6 is irrelevant. Property income and gains are irrelevant because already they have accounted for after operating loss. They have accounted for in this question gains and property income separately. So don't worry about it. Now, B, before taking account of any possible loss relief claim, calculate Crumble Limited taxable total profits. Means you need to make the company's pro forma. You need to make the company's pro forma. You remember I used to tell this dialogue in the class. If you ever need to calculate tax for individuals, if you are required to calculate the tax for individuals, there are 3 columns in your mind: non-saving, interest, dividend. Whenever somebody tells you to calculate tax for individuals, non-saving, interest, dividend will come in your mind. But if you are required, if you are asked to calculate, if you are asked to calculate companies tax, so only one column. For companies, there is only one column: trading income, property income, gains, and interest income. Remember, you will get total profits, and from total profits, you will deduct QCD, you will get taxable total profit. That's it. In companies, there is only one column. So you need, in B requirement, you have to make that column. In B requirement, you have to make that column, but they are saying before taking account for any possible loss relief claim. So my dear student, no need to set off any loss in requirement B. No need to set off any loss in requirement B. Okay. Now, next thing, state by which date. I'm discussing requirement here because I'm going to change the screen. You know, I'll change the screen for Excel work. State by which date Crumble Limited must make a claim if it wishes to set its trading loss for the 9-month period ended 31st March 2022 as calculated in Part A against the company's total profit for the year ended 30th June 21. Now tell me. Very easy. First, let me introduce you. You know, there are different losses. There are different reliefs for trading losses. You can carry forward your trading loss. You can carry back your trading loss. You can do current year. So there are lot of options we have. Lot of options we have with trading loss. So how will tax department come to know what relief we want? How will tax department come to know what relief we want? So we need to write a letter. We need to inform them. We need to claim from tax department what we want. We need to claim from tax department what we want. Okay. So there is always a claim due date for claim. There is always a due date for claim. And my dear student, look at here. If I want to do current year set off and carried back, if for companies, I'm talking about companies. For companies, if I want to do current year set off and carried back, the limit is 2 years. The limit is 2 years from the end of the loss making period. The limit is 2 years from the end of the loss making period. I hope you remember you did the corporation tax. Let me recall you. There is a question which I teach in class Half-Life Limited. There is a question which I teach in class Half-Life Limited. Remember, in that question, I introduce these dates. I introduce you these dates. So listen. What's your loss making period? Can anybody tell me? Your loss making period is 31st March 2022. Our loss making period ending on 31st March 2022. Our loss making period ending on 31st March 2022. So you have 2 years from the end. 2 years from the end of our loss making period, that is 31st March 24. This is the answer. 31st March 24 is the answer. I request you guys to please read this requirement again in a very calm way. If you read it, you will understand it. One more requirement. Calculate the amount of corporation tax which will be repaid by HMRC if Crumble Limited makes this loss relief claim against the company's total profits. Obviously, listen, when we are in the same company, we are not about group. We are not talking about group of companies. Here it is the same company. So when same company set off, then same company set off always total profits. Current year total profits first and then 12 months back. Current year total profits first and then 12 months back. Total profits, not TTP, total profits. So they are saying how much relief, how much relief we'll get in last 12 months in the year ended 30th June 21. They are saying how much relief will we get in last 12 months, only for last 12 months. Now read the note. You should take into account any necessary loss relief claim against the total profit for the 9 months period. Yes. If you want, see, let me tell you, see, wait. This is your 31st March 2022, 9 months. Okay. And this is your 12 months of year ended 30th June 21. Okay. So if you want to go back, and set off, you can't set off the total profits directly. For companies, you cannot go back directly. You need to do first, listen. First, you need to set off current year total profits first, and then you need to go back here. Okay. So that's what examiner is saying. See, examiner is very helpful. Examiner is giving you idea. That if you want to go back, first kill the current year total profits. If you want to go back, first kill the current year total profits. This is what examiner telling you. Now, my respectable students, we have discussed the question. It won't take much time now. Only Excel work is left. Don't worry. And if you want to take the picture of the question, see, if you want to take the picture of the question, let me move you the question. This is the first page of the question. This is the first page of the question. This is the second page. If you want to take the pic, because I'll change the screen. This is the third page, please. And this is the last page. One thing which I would like to highlight before I change the screen, see this number, all of you, please look at this number. That for the last, see this, for the last 12 months, total taxable profits are 166,300. Last 12 months, you can write somewhere. Please write it because I'll change the screen. Last 12 months, total taxable profits are 166,300. This much profit we have in last year. Please write it somewhere. Now listen. I hope you can see the screen. Now, let me move to Crumble Limited. Okay. So, okay, one thing. See, when I solve the question, I already write these theory with me before because I need to save the time. I want to give more time on explanation because the objective of my class is to make you understand. It's not my objective to teach you how to write operating loss word. It's not my objective to teach you how to write accountancy P. That's not my objective. Obviously, we are mature enough to write all these things. A kid can write this, okay? But in the exam, you need to do it from zero, okay? From zero, you have to do it. But just to save my time, I do it these things before the class. So now, what is the operating loss? Can anybody tell me what is the operating loss? It's 187,800. Operating loss is 1,878,000 negative. Now, next thing is accountancy fee. Accountancy fee was allowed expense. Accountancy fee was allowed expense, and for allowed expense we write 0. For allowed expense we write 0. Then we have compliance check. Compliance check is also allowed. Compliance check is also allowed. And although it was included in accountancy fees, but I have written in a separate line, it's allowed. Then you have legal fees in connection with the issue of loan notes. It's also allowed. Legal fees for issue of loan note allowed, but legal fees for the issue of share capital is not allowed. That is 9,300. Okay, so we'll add back. Add means positive. Then legal fees in connection with the registration of trademarks, it's allowed. Then construction of a new car park. I told you new car park is improvement. It's improvement, so 7,300 will be added. Then repairing the wall of an office building, it's allowed. So we'll write 0. Qualifying charitable donation, not allowed from here. But yes, it is allowed from total income. So QCD is 3,400, not allowed. Then removal expenses allowed because it was not an expansionary move. I told you. Fine is never allowed. We'll add back. Then finally, remaining expenses. It was written remaining expenses were all allowed. And now tell me, interest payable. Hope students you remember interest payable. I taught you interest payable was 8,750. It was 8,750 plus 2,500 for the three more months. 2,500 for the 3 more months. Remember? So it was I think 11,250. Remember? It was 11,250, and as the loan was taken for trading purposes. So that's why it's an allowed expense. And you will deduct it. So you will write minus 1125. Okay. So let's calculate the trading loss. 177,850 is your trading loss. Your 7-mark requirement is done. My dear students. 7-mark requirement is done. Did you understand it? If yes, then please write on the chat box. If you understood it, then please write on the chat box. Now one thing, listen. See the loss. Open your eyes and see the loss. This is a very big loss. And you know, last year profit is only 166 something. I just showed you in the question. Remember, the last 12 months profit is only 166,000. So yes, this loss can easily go back. This loss is big enough to easily go back. Just make up your mind. I'm making up your mind for the last requirement. We are making up mind for the last requirement. Now, the next thing is property income. Requirement number B, they told you to calculate property income and gains. Property income and gains. Okay. Listen. Hope you remember. They gave you rent for 6 months. 6 months rent was 6,600. 6 months rent was 6,600, but on accrual basis, we'll only include 4 months. So what we'll do, 6,600 multiply by 4 divided by 6, right? This will be 4,400. Then security deposit is not an income at all. But now they gave you insurance of 840. But that 840 was for 12 months. 840 was for 12 months. So multiply it by 9 by 12. So this will be I think 630. 630. Okay, so let's calculate this is your property income. This is going to be your property income. Now wait, for chargeable gain, very simple, DP less index cost. DP less index cost. What was your DP? Your DP was 25,200 minus your index cost was 13,600. Remember? So this will be 11,600. 11,600. Okay. Now, can anybody tell me total profits? Total profits. Can we calculate total profits? Wait. This is property income. This is gains. This 15370 is your total profit. Now wait. We are in companies. In the next requirement, we have to make the pro forma. In the pro forma of companies pro forma, there is trading profit, property income, gains, and interest income. Remember these four things: trading income, gains, property income, and interest income. Wait, in trading income, we have a negative number. See this, see the screen. In trading income, we have a negative number. So when we make the pro forma, listen to me very carefully. When we make the pro forma, if we have any negative number, we write 0. When we make pro forma, if we have any negative number, we write 0. We write 0. Okay, right? So for trading income, no need to write anything. That means 0. And yes, this is your, see, this is your property income. This is your gains. So automatically you calculated the total profits. Automatically you calculated the total profits. Okay. Now from total profit, you deduct QCD. In this question, I think QCD was 3,400. QCD was 3,400. So now let's calculate the TTP. 11970. So my dear students, that's the end of part B. That's the end of part B. So you have done major 2 parts. You have done major 2 parts. Let me move the screen so that you can see the upper part as well. See this, please. Only 5-6 minutes are left. Please don't be relaxed and look at the screen carefully. Now, third requirement, I have already told you about the claim date. Remember, I have already told you, see that it is written here. It is written here. Claim date, I have already explained you in the question. Claim date. For loss again total profit. For loss again total profit, the claim date is 2 years. For loss against total profit, the claim date is 2 years. The claim date is 2 years. Now the last requirement. Listen to me. Just think over it. This, my dear student, please cooperate with me. This was your trading loss. Keep this number in your mind. Just last 5 minutes. This was your trading loss, 177,850. This, keep this in mind. If you want to go carried back 12 months back, if you want to go 12 months back, first you need to set off current year total profits. If you want to go 12 months back, first you need to set off current year total profits. And see the screen. What are your current year total profits? Your current year total profits are 15370, not TTP. When you are in the same company, you always set off total profits, not TTP, not taxable profits. So from 177, see, from 177,850 loss, first you will sort off this. First you will set off 15370. Now what will be the remaining loss? Come on, all of you take out the calculator. All of you take out the calculator. 177,850 minus 15370. What will be your remaining loss? The remaining loss can go back. The remaining loss can go back. I think it will be, let me do it with my cell phone. Wait, we'll do it formally also. Wait, 177,850, 177,850 minus 15370. Yes, 162480 loss, you can carry it back. 162480 loss, you can carry it back. And listen, in last year you have profit of 166 something. In last year you had profit of 166,300. So when you have profit of 166,300, you can easily set off 162,480. You can easily set off 162,480. And yes, you will get 19% refund. Tax rate is 19%. So you will get 162,480 multiplied by 19%. You will get the refund of 162. Yes, my students, you have written 162,480 multiplied by 19%. So let me write this last requirement. Let me type this last requirement in front of you. Minus 15. This amount of loss will be carried back. Okay. Now, this is less than Crumble Limited's taxable total profits of 166,300 for the year ended 30th June 2021. So the corporation tax repayable will be, see, 162,480 times 19% will be 30871. 30871. That's it. This amount of refund you will get 30871 refund you will get back. 30871 refund you will get back. Did you understand the question? Did you understand? Now listen. I have a question. In your whole life, you always stay happy or you have some plus minus as well? There are happiness and then you feel sad sometime as well. So same goes with the exam. In the exam, you not always win. You don't always win. You don't score 100 marks. 100 marks is exception. So yes, this plus minus. So if it is a 15-mark question, you can do 5 marks mistake. You can do 4 marks mistake. You can do 3 marks mistake. You can do 6 marks. Still, you will get 9 or 10 marks. Still, you will clear the paper. So always look at the positive side of the paper. Always look at the positive side of the paper, to be very honest. And I have many examples in my career that there are students, they start course in last 1 month. They take admission in last 20 days and they clear. They take admission in last 20 days and they clear the paper. And there are students, they take admission 6 months before and they don't clear. I repeat, there are students who take admission 20 days before and they clear it. They start studies 20 days before and they clear the paper. And there are students who start 6 months before and they don't clear. So thing is your objectivity, your focus. And you know, now worldwide inflation is high. Even in some countries like in Pakistan, it's right now tough time. Exchange rate is very, you know, inflation, exchange rate, all these conditions are tough. So at least you can support your parents by clearing the paper in first attempt. Just think over it. You can support your parents by clearing your paper in first attempt, because now we have less resources. So kindly don't waste a single minute. Still you have time. Still you have 15-20 days. 15-20 days are enough. You can still work a lot. You can still work a lot. And I have recorded many revision days of CGT, IHT, value added tax. Listen, in the last session I recorded for MTQ's class separate. We have the latest past paper of March, June 2022 attempt as well. So all these things are available. Be active on WhatsApp group and be disciplined on WhatsApp group. Please don't confuse anybody. The objective of WhatsApp group that you can do a positive discussion. Don't demotivate anybody. Don't discourage anybody. Okay. So take care, and that's the end of the class. Allah Hafiz. Best of luck for your exam.